I am right now joined by Paul and Michael. In fact, Manulife is the big boys of the global asset management with over $800 billion of assets in 17 countries. And now they are looking at raising their India footprint by partnering with Mahindra Mutual Fund. Paul, Michael, gentlemen, thank you so much for chatting with me today here.
Thanks for having us.
Paul, let me start with you. Global investing landscape. How are you analyzing this right now? Is there a risk-on rally which is on? US markets, of course, are at a lifetime high, but the macro data perhaps is not as one would like it to be. Is there a disconnect? How are you analyzing stuff?
Yeah, I guess when we take a step back, as we entered this year, we saw a pretty big pullback with the markets in Q4, and a lot of that was, I think, people were assuming the worst. We had a pretty good run in the markets globally, and as people saw growth slow down a little bit, we saw a significant pullback. I think what we've seen since then is every quarter we've seen some of that uncertainty go away, and you've seen markets slowly come back. Initially, markets came back, investors did not, but now we're starting to see investors come back. I think there was a concern around the U.S.-China trade tensions, what that might mean. There was concern around Brexit, and there was a concern whether the growth we were seeing in some of the markets would just stop and potentially go to recession. What we've actually seen is growth moderate, but actually not stop, and it seems to be a little bit more sustainable than I think people had expected. And with that, we have seen investors come back into the market. What that means, though, is we've seen our expectation is really a lower for longer market. What we mean by that is interest rates, while they're low, we see them staying low for a period of time. And frankly, what that's done is we've seen a shift in investor preferences because of it, because everyone is searching for yield. And I would say globally, we've seen the shift to income solutions, which we're one of the leaders in creating those types of solutions globally. And so it's set us up for a lot of success go forward, but I think we've seen a little bit more risk on come back into the market with maybe more moderate expectations around growth go forward, but at least growth versus maybe a recession.
Mm-hmm. So what's the kind of data points you're getting out of your so many global offices, 17 of them if I'm not wrong? Mm-hmm. Is money looking at emerging markets increasingly now with the ample liquidity sloshing around globally?
Yeah, well, we've definitely seen that. I mean, in all of our markets globally, and everyone's somewhat unique, I think the reality is markets are more connected today than they used to be in the past. So while people would look at diversification by markets, we look at the broader trends because generally the markets move in tandem somewhat. However, because of this lower for longer market, we have seen a desire by a lot of investors, some of our European investors, to look at our capabilities, particularly Asia fixed income capabilities. Mm-hmm. And we've seen more of an appetite to go overseas to get that yield. Mm-hmm. And I think what's started to make that move from our perspective is they can do that in a company like ours with a global brand. But also, we have over 450 investment and product professionals around the globe on the ground, credit expertise. So they get that deep local understanding, but backed by a brand of ours. And we start to see some of that investment come in from institutional players outside of Asia. Mm-hmm.
Michael, you've done Asia for a very long time. You're an old Asia hand, I would say.
I'm still young.
Oh, of course. But this is the game in which experience matters, and you get better depending on the number of years you've done Asia. Yeah. How does India stack in comparison to rest of the Asian emerging markets?
We think we're very optimistic on India's future. We think it's fueled by a number of different things. Surplus labor, obviously the demographics that everybody talks about. Every time you talk about the rising middle class in Asia, what they're really talking about is the rise of middle class in India. It'll fuel the vast growth of affluence within the region. Today, the mutual fund market within India is about $390 billion. We think it's going to be the fastest growing mutual fund market across the Asia region. We think within the next 3 years it's going to grow to over $600 billion and ascend to become the second largest mutual fund market in the region, displacing Japan. And so we're very confident on India's future.
Mm-hmm. The mutual fund data, the Association of Mutual Funds, AMFI data shows that incremental growth of flows into the market is quite high from smaller cities in our country. Yes. How do you see the potential of flows from smaller cities of our country into the market as people become much more aware about financial assets and mutual funds?
Yeah, to start with, I think demonetization helped enormously. There was a period of time, whenever somebody talked about India and the mutual fund market, they would talk about the top 15 cities. Today, they talk about the top 30 cities. Going forward, the vast bulk of growth of the marketplace, we think, is going to come from cities outside the top 30. If you look at the penetration of the market today, only 30 million people invest in a mutual fund out of a population of over 1.3 billion. That's not enough to support the India economy and its rise. Is what we'd like to see is deeper penetration, like what you see in Thailand and Malaysia, 30% mutual fund AUM to GDP. We think it's going to come from those cities outside the top 30. And that's why we partnered with Mahindra. Over 6 million customers across the region, a fantastic brand, deep reach all across the region. And so it's incumbent upon us to improve that penetration, to improve the understanding of mutual funds, simple products that people can understand, and broaden our distribution reach.
You know, you're announcing this partnership, and we are having this chat also at a time when the Indian markets are at record highs. But the growth in India is flagging for several reasons. And one section of the market is concerned about this disconnect with the real economy and the markets. What are your thoughts? How have you seen similar conditions evolve in other emerging markets in Asia as well before?
You know, everybody else looks at India and sees, yes, a softening of economic growth, but 5% for most nations would be total joy. This is a natural teething problem from the type of significant reforms that India has undergone, that has seen improving infrastructure, a more formal economy than what's existed before, stronger private banking sector than what we've seen. So yes, it's softened, but we see the glide path out. And the glide path out, we think, is going to stem from privatization of state-owned enterprises, the tax changes that are going to incentivize savings, and further tax changes. They're going to take those improved savings and deploy them into the India economy through capital market, capital formation. That's what we see. Long term, again, and we are very long term, having been in the Asia region for over 100 years, is we have just an abiding confidence that India's demographic potential will be realized. And moreover, you know, the trade tensions that you see in China, India has been relatively insulated from those trade tensions given the nature of its economy. But they are a contender. Is the nature of their labor force, the cost of that labor force, the improving infrastructure that we see, means that India stands to benefit from these trade reallocations that we're seeing globally.
Paul, you know, at Manulife, you guys have been into asset management in various asset classes, various countries for over 100 years, 120 years, if I'm not wrong. Tell us, what stage of evolution is Indian capital market in your experience, from your global experience? What's the potential of Indian capital markets hold, say, 8-10 years far out, in your thoughts?
Yeah, I mean, when we look at the different markets, or we even look at our business, there's a different level of sophistication, a different level of markets by the client we serve, as well as the markets we're in. And I would say we see everything from large institutional clients in a lot of our markets who are more sophisticated, whether looking at real assets, real estate, or timber, or agriculture, to more traditional asset classes. And then you take the other extreme of that, where you have, you know, investors who are just starting to invest for the first time that need very simple solutions, you know, income focused, or they're used to holding real estate and want to now get that and maybe a more diversified portfolio in a mutual fund. I think as we look at the markets, that's, you know, if talking to points Michael made here, you know, in India, the AUM of the mutual fund market to GDP is less than 10% versus some of these other emerging economies in Asia around 30. There's just a tremendous runway to move that more in line with the other emerging markets or more the developed markets. And GDP is going to grow itself, so you think the absolute numbers, it's a fantastic opportunity. But more importantly, if through the joint venture with Mahindra, we can help households here make that transition and take some of that cash and put it to work and create wealth for them, not only will we improve the lives of the customers, but that money will get invested in funds that get redeployed in the local capital markets and ultimately supports the growth. So you get a situation where I think we're at the very early stages in India here for a very long runway. And I think, you know, what you talked about, the slowing of growth, when we look long-term potential, you look at some of the demographics Michael talked about, and this fundamental shift and the wealth that will create and how that gets redeployed back into the market, we just see a really long runway here for India and a fantastic opportunity for us in Mahindra.
In association with Jaguar.
In association with Tata Capital. Count on us.
ये क्या? एक हफ्ते की ट्रिप के लिए पूरी अलमारी पैक कर ली?
एक नहीं 3 हफ्ते यूरोप में।
और पैसे?
मैनेज हो गए।
ठीक है भाई, करो खर्चा।
खर्चा तो मैं किश्तों में चुका दूंगी, पर लाइफ थोड़ी किश्तों में जीऊंगी।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम। यूनियन बैंक ऑफ इंडिया।
Cruise the high seas in style. Indulging in the finest luxuries on board the Genting Dream. It's time you stop window shopping and actually live the life you dream of. Here at ET Now, we help you take the right investment decisions and make sure that your wealth strategies are aligned to serve your goals. Catch the Money Show only on ET Now.
From the point of view of a foreign investor, not only are you having this strategy in place with Mahindra, but you are investing here as well. Talking about portfolio flows, after 6 to 8 months of dry spell in India, last 3-4 months, foreign portfolio flows have suddenly increased once again. Over the longer term, do you see more Western investors, blue-blooded institutional money, which perhaps did not have India on their radar up till now in global scheme of things, or it was too small? Do you see that emerging in a bigger manner for them, re-emerging in a bigger manner for them?
Yeah, I do see that, similar to the example I gave earlier of money in Europe now coming into Asia fixed income as an example. I think in a lot of cases, particularly what we've seen with our firm, is they're looking for a firm that really understands the market locally, that has the deep credit experience locally, and a brand that they can trust. And I think with the Mahindra Manulife joint venture, having on-the-ground resources here in that global perspective around all the asset classes and capability, the global risk profile, the governance and frankly the experience of seeing how emerging economies move in this transition and having done that in other economies, I think we're well positioned to help them come and invest, through the organization that we're creating because of the trusted brand and really that capabilities. And I think the other opportunity for us is, frankly, we do take a long-term approach, and because we're in 17 markets, we're not over-reliant on any particular market for our success, and that allows us to really stay committed to markets that have long-term potential and really weather a lot of the economic cycles that are normal course of business.
Talk to us about, from the strategy point of view, when you were analyzing the Indian market, partnerships, I'm sure you must have gone through various proposals before arriving upon this one. Yeah. What went through in your strategy before taking this decision, and how did Mahindra's actually come up as a brand to partner with?
So we've been looking at India for quite some time, but the single most important factor for us was the partner. And we believe we have that with Mahindra. Yeah. I mean, from our perspective, when we look at the opportunity for India and then bring it down to Mahindra, we have a partner that has a trusted brand. They share our values and DNA as an organization. Mahindra is about improving the lives of customers. Our mission globally is about making decisions easier and lives better for our customers. We have that alignment of a broader purpose of what we're trying to do for the consumers that we serve. The other thing is the vast distribution reach that Mahindra has in India, and frankly, someone that understands India, the market, and the customers much better than we would as a foreign player. They also have a history of building successful businesses with foreign partners, as we do in some of the other countries. So when we look at the fit and really what they bring to the table from our perspective, we couldn't have found a better partner to really enter the market, improve the wealth of our customers, and ultimately improve India by having that capital go back into the market.
Michael, how are you analyzing investing in risky assets or growth assets such as equities in a moderate growth environment globally, not only India? Should investors moderate their return expectations for the next 8-10 years?
Let me take a step back because it's not just economic cycle that drives Asian investor behavior. What we think is happening all across the region, India is not alone. This is being fueled by profound demographic shifts. You're seeing high levels of urbanization. The traditional multi-generational familial households are breaking down. There's a historical legacy of people investing on a barbell basis of cash deposits and real estate, and that's a legacy of a bygone era. Is people are shifting their money out of banks, out of bank deposits, into income-oriented strategies, not just in India, but all across the region, far beyond the kind of the day-to-day movements and the economy. And we think that that's secular, long-lasting, and that's the segment that we intend to serve.
And the other thing supporting that is just the massive retirement funding gap in a lot of the economies we serve. There's a gap, and individuals are going to need to fund some of that gap themselves. And we have experience as a global retirement provider with retirement businesses in Hong Kong, in Canada, and the United States, and Indonesia, where we can help individuals do that and really help fill that retirement gap. And that comes back to this desire for income, and all of these themes we're seeing, they're not coincidence. They're trying to meet real needs and some of the challenges that certain markets are facing.
So if we analyze the business of asset management in India right now, it's in a way, of course, fast growth with the segment, but it's dominated by a few large players. And bulk of the assets are with 3-4 players at the top. Though there are a large number of players, taking away market share from the biggies has not been easy. How do you see competitive landscape pan out over the next couple of years? As of course, and your company as well, Mahindra Manulife joint venture, will also have to navigate that space.
Well, I'll start. Maybe Michael, you can jump in. I mean, from my perspective, I just look at the complete size of the market and the growth of the market, and to me, it's less about stealing share from other players as it is about meeting the individual needs of the customer. And I think, again, with the distribution reach that Mahindra has, with the trusted brand and the capabilities we're going to bring to the organization, I think we're well positioned to really grow the overall market and benefit from that here in India. So from our perspective, we care less about who the competitors are and more about the value we're going to bring to the end consumer. Because at the end of the day, we meet expectations of our customers. Everything else takes care of itself.
Would you like to add to that?
Yeah, we operate in very similar markets all across the Asia region, emerging markets. A lot of asset management companies, they have the same MO, if you will, and we see ourselves as utterly unique in terms of how we operate in those markets. And a key differentiator, for example, there's many, but one of them is captive distribution, is reach beyond these major cities. So for example, in Indonesia, we developed a digital tool, we call it Click Mami, that allows us to reach the entire archipelago beyond just Jakarta. That's a form of direct distribution. It's a space that we feel particularly comfortable in. And so, yes, in India, just like in every other market in Asia in which we operate, it is a deeply competitive, concentrated market, but we're accustomed to operating in those type of climates.
So technology is one differentiating tool which you guys will bring to the table. How about your vastly experienced team which is sitting in Asia? Would they integrate with Mahindra's team and come out with have the deeper research and sharper products?
Yeah, that's really the goal, is to really transfer the knowledge and expertise we have to the local individuals here in the organization, and that's something that we're just accustomed to doing with partners. It's not to bring all the talent in and leave them here. It's really about transferring the talent. And we're really here to work together. So, I mean, those resources are available to keep that learning, bring what we're seeing, what we're learning globally into sharing that knowledge locally. And we really just see it all connected to the global organization and just making it work from that perspective.
Cross-fertilization.
Sure. Michael, purely as an asset allocator, how are you analyzing the attractiveness for an investor, Indian equity landscape right now?
So I think, let's take a long-term view. China historically has sucked a lot of oxygen out of the room because that was the market that everybody focused on. But the thing that you constantly have to come back to is that there are very different demographic stages. China is at the end of their demographic dividend. They will see population declines. They're already seeing labor force declines. And India is at the very beginning of theirs. Totally different states of play between those two markets. My guess is that over time, because of all the things we talked about, the reforms, the labor force, the cost of that labor force, improving infrastructure, growing formal economy, is the allocation to India can only go one way.
So some of the mega trends, if you could highlight for our viewers. One, you see a lot of money which was money which was allocated for Asia and found its way to China will start moving towards India. Yes. And Indian investors climbing up the awareness and evolution chain and moving a lot of money from gold, real estate to equities. Something else, a couple of things which you see how Indian markets will develop, and you have seen similar trends elsewhere?
That's typical. So far what we've seen in India, we've seen time and again all across the Asia region. I think that the way things are going to develop here is that as the government gets confident in their currency, their FX reserves, the market is going to open up, it's going to reorient itself from a pure domestic orientation to more of a global international orientation with relaxing regulations in terms of that, that offshore investment. I think people are going to get increasingly sophisticated in the type of investment solutions that they will consider. We've seen a pivot to equities recently within India. But we think over time, because of the preponderance of money held in cash, that there will be a very significant shift to increasingly more sophisticated income solutions. So that's what we kind of see on the radar for India.
In fact, just as Rana was earlier speaking about the flows to India, active flows to India have only increased after corporate tax cuts and when our government brought the tax rates at par with global averages. And of course opening up of the economy as well. Yes. How do you see some of the challenges which we need to navigate through, both on the policy front as policy makers and also for investors to become much more aware, because this is a risky asset after all. And Indian investors have a tendency, and like many others, to get hurt and then not come back for a very long time. Yeah. This has happened several times in the past.
Well, for example, we're seeing some credit dislocations in the market. And again, I would say to you, that is not at all unusual across the markets in which we operate. China itself is experiencing record high default rates in their bond market, one of the largest bond markets within the region. And so there'll be some temporary dislocation from that as people are concerned about the unknown. But that's why we've built up such an enormous credit capability within Asia. That's been our experience as these markets migrate toward more credit. They're not as transparent. You need on-the-ground fixed income and credit professionals to analyze this. And it goes along with my earlier comment. There is a shift towards income-oriented strategies, and credit within Asia and India is a fundamental part of it. You cannot survive without building that transparency and the analysis that goes with that type of trend.
Clearly, I was observing that in several other markets, you guys are operating in private credit and a lot of income products as well. Could that follow after this joint venture comes in place? Would that be how would you like to grow this relationship going forward?
Yeah, I think from my perspective, again, you mentioned some of the asset classes, but we have a very broad range of expertise from traditional public equities, fixed income, deep credit globally, to real assets, whether it's real estate. I mean, we're the largest institutional manager of timberland in the world. We're one of the largest managers of farmland in North America, whether it's infrastructure equity, private credit. You know, I think in some of the more mature markets, we've seen that typically focus on more the high net worth institutional investor. However, it is starting to shift down market because it does benefit a lot of other traditional investors, and a lot of it's uncorrelated to equity markets, and so it makes a lot of sense. I think that's a natural evolution of every market. I think our priority in the short term is to really help individual investors make that transition, to keep solutions simple, help educate them as they start investing into the market. And I think as their education, awareness, their confidence of investing improves, then we can build more sophisticated solutions that meet their needs along the way.
Yep. Michael, in the Indian economy and the policymakers and our political leadership have set a target of $5 trillion, the size of the economy, and perhaps $10 trillion in the next 10, 12 years. Do you see that being achieved? What would it take for us additionally than what we are doing as a country to reach there faster?
I'm not going to be able to comment on whether they'll be able to achieve it or not, but it is the right direction for sure. Is what we look for is stability of policy making. We are looking for reform. We think it's essential for India to realize this demographic dividend, that these reforms, these investments take place. As I said before, is with these global trade dislocations, India is a contender. Is they could be a major beneficiary of the global trade reallocations, and these investments are going to be essential toward that. Yes.
All right, Paul, Michael, thank you so much for your time today, talking to us about the partnership you've put in place with Mahindra's, and we look forward to getting more of your views going forward as well. Thank you very much.